Most investors today are obsessed with AI stocks. Everywhere you look, people are talking about artificial intelligence, machine learning, automation, and the next big breakthrough company that could dominate the future. But here's the real question. Smart investors are asking right now, what's actually the better opportunity in 2026? AI stocks or semiconductor stocks? Because while AI companies are getting all the attention, semiconductor companies are quietly powering the entire AI revolution behind the scenes. And in this video, we're going to break down both sides, compare the opportunities, the risks, the long-term potential, and most importantly, which sector could explode bigger in 2026. Now, before we begin, remember, this is not financial advice. Always do your own research before investing. Let's get started. To understand this properly, we first need to understand how these two sectors are connected. Artificial intelligence is the software side of the revolution. Semiconductors are the hardware side. AI companies build intelligent systems, algorithms, chatbots, and automation tools. But none of that works without chips. Every AI model, every data center, every advanced computing system relies on powerful semiconductor technology. That's why many investors are starting to realize something important. The AI boom may actually create massive opportunities for semiconductor companies as well. And in some cases, semiconductor stocks could even outperform traditional AI stocks. Now let's talk about AI stocks first. AI stocks are companies directly involved in artificial intelligence software, cloud AI systems, machine learning platforms, robotics, automation, and data intelligence. These companies are attracting huge investor attention because AI is becoming integrated into almost every industry. Healthcare, finance, cybersecurity, marketing, transportation, even education. AI is transforming how businesses operate, and because of that, investors are pouring money into companies that are positioned to benefit from this transformation. One reason AI stocks are so attractive is growth potential. Some AI companies are still in the early stages. That means if they succeed, the upside could be enormous. We already saw this happen with companies like NVIDIA, where massive demand for AI technology pushed the stock to incredible levels. But there's also a problem. Many AI stocks are becoming extremely expensive. When hype enters the market, valuations can rise very quickly. And when valuations become too high, expectations become dangerous. If a company fails to deliver strong growth, the stock can fall hard. That's one of the biggest risks with pure AI stocks right now. The excitement is massive, but expectations are also extremely high. Now let's switch over to semiconductor stocks. Semiconductor companies manufacture the chips and hardware required for AI systems to function. Think of semiconductors as the engines powering artificial intelligence. Without chips, there is no AI revolution. As AI systems become more advanced, they require more computing power. That means stronger processors, faster chips, more data centers, and higher energy efficiency. This creates huge demand for semiconductor companies. And unlike some AI software companies that are driven mostly by hype, semiconductor businesses often generate strong real-world demand. Their products are physically needed. And that's why many analysts believe semiconductor stocks could experience explosive long-term growth as AI adoption expands globally. Now here's where things become interesting. AI companies may create the software, but semiconductor companies sell the tools every AI company needs. And in investing, sometimes the companies selling the tools make even more money than the companies creating the products. We've seen this pattern many times in history. During gold rushes, many sellers of tools and equipment became extremely wealthy. And today, semiconductors are becoming the tools of the AI gold rush. But semiconductor investing also has risks. The semiconductor industry is highly competitive. Technology changes rapidly. Companies must constantly innovate. And geopolitical tensions can also impact chip manufacturing and supply chains. This means semiconductor stocks can be volatile too. So which sector actually has the bigger opportunity in 2026? The truth is, both sectors could perform extremely well. But they may perform differently. AI stocks offer explosive, hype-driven growth potential. Semiconductor stocks offer infrastructure-driven growth potential. AI companies depend heavily on innovation and adoption. Semiconductor companies depend heavily on demand for computing power. And as AI expands, demand for chips may continue rising for years. Personally, many long-term investors are starting to focus on balance. Instead of choosing only AI stocks or only semiconductor stocks, they're building exposure to both sectors. Because the reality is this: AI and semiconductors are connected. One cannot grow without the other. If AI grows, semiconductors benefit. If semiconductor technology improves, AI becomes even more powerful. That creates a cycle of growth between both industries. Now let's talk about another important factor most beginner investors ignore: timing. Some investors enter markets after massive price increases because they fear missing out. But smart investors understand that patience matters. Not every stock will explode overnight. Some opportunities take years to fully develop, and that's especially true in technology investing. The companies dominating in 2030 may not even be the biggest names today. That's why research matters so much. Instead of following hype alone, investors should focus on understanding industries, growth trends, competitive advantages, and long-term demand. Now here's something important to think about. Artificial intelligence is still in the early innings. Many businesses are only beginning to integrate AI into their operations. And as adoption increases, infrastructure demand could rise massively. That means more chips, more servers, more cloud computing, more energy demand, and more opportunities across both sectors. This is why many investors believe we could still be early in the AI investment cycle. But again, there are no guarantees in the stock market. Technology changes quickly, competition is intense, and market sentiment can shift rapidly. That's why diversification remains important. Never rely entirely on one company or one trend. Spread risk intelligently, think long-term, and avoid emotional investing. So let's quickly summarize everything. AI stocks represent the software and intelligence side of the future. Semiconductor stocks represent the hardware and infrastructure side. AI companies may offer massive growth potential through innovation. Semiconductor companies may benefit from the enormous demand required to power AI systems globally. Both sectors have opportunities, both sectors have risks, and both could potentially explode in 2026 and beyond. But if the AI revolution continues growing at the pace many experts expect, semiconductor companies may quietly become some of the biggest winners of all. Now I want to hear from you. Which side do you believe has bigger potential? AI stocks or semiconductor stocks? Let me know in the comments below. And if you enjoyed this video, don't forget to subscribe for more content on AI investing, future technology, and stock market opportunities. Because in the world of investing, the biggest opportunities are often found before everyone else notices them.